Unrivaled Nation. Today we are talking about Celsius, CELH, where just yesterday they reported their fourth quarter results along with a game-changing acquisition of Alani Nu. This caused shares to jump higher, around 30% higher. Perhaps this jump was attributable to the 20% plus short interest in the stock. I think a lot of short sellers were saying, oh, this company, this brand is just in terminal decline. And they did not sign up for the short thesis to say, oh my goodness, you're going to be acquiring this hyper growth brand, Alani Nu. What's this now mean for the company? And, the reason why this is important is because Alani Nu, this is a sizable acquisition relative to Celsius. I mean, just earlier this week before the jump, it was closer to a $5 billion company. So, purchasing Alani Nu for closer to $2 billion, this is a big deal. And so in this video, I'm going to walk you through what is Alani Nu, what's it potentially mean for Celsius, what are my thoughts on Celsius in the years ahead, why this sort of changes the risk perspective, how I'm thinking about it, my own personal investment journey with Celsius, and more in this video. As always, if you enjoy educational investment content, I do appreciate you hitting that thumbs up, hit that subscribe button. Let's jump right into understanding what is going on, with Alani Nu. As I already mentioned, around a $1.7 billion acquisition, supposedly around 12 times EBITDA multiple, and they're issuing a sizable amount of debt, just shy of $1 billion to make this possible. They are using, a significant amount of cash that they have on their balance sheet, but this is transformative. You can see sales for Celsius around 1.4 billion. Now, if you're looking at Celsius plus Alani Nu, it's closer to 2 billion, going from around 256 million in EBITDA to now looking at closer to 400 million. And so I think investors really love to see this story because they're saying, yeah, we're expecting this to be accretive, meaning increasing their earnings, increasing their cash within a year. So within this year of acquiring that, this is immediately benefiting on a per share basis. So investors like to see this, like to see a strong cash flow profile. We'll talk about that in just a second. And overall, the terms of this deal seem quite reasonable, very reasonable. Less than 3 times their revenue for Alani Nu, approximately 12 times a fully synergized EBITDA. So that means there's, a lot of assumptions around 50 million in synergies that they're expecting to throw in there. So that is a sizable amount, but saying, look, if it plays out the way they expect, it's only 12 times. That is not a crazy expensive acquisition, especially for a fast growing asset. And the owners of Alani Nu are going to own, because part of the deal is financing cash debt along with, issuing stock to the former owners. So the former owners are now going to own just shy of a 10% stake in Celsius, and they're going to be, forced to sort of hold it for a year or two. So that does improve the alignment, expecting, as I already mentioned, cash EPS accretive. So investors like to see, yes, improving your cash flow within that year of acquisition. And the leverage is very reasonable at 1 times pro forma net leverage. So this is sort of checking all the boxes that investors like to see. When you're looking at Celsius versus Alani Nu, it does have a complementary aspect, whereas, Celsius was more gender neutral. This is clearly female focused, where Celsius was more about functionality for athletes and fitness focused individuals. This is more about empowerment and wellness for young women. So there definitely is, this is not necessarily cannibalizing a lot of Celsius's business. It's additive, and it's also one of the fastest growing brands in the energy space, because you can see from a retail sales perspective. So this isn't what they necessarily see. This is from the end point perspective. So think about it. If you're aggregating, let's say the 7-Elevens, the Amazons, think about the retail, how much dollars are being sold of Celsius. Celsius grew their volume by 22% last year on a retail perspective. Their end revenue was not that great, but this suggests they're still a growing brand. And Alani Nu grew their, retail sales by 64%, the fastest grower out of all these, brands. So this is, Wall Street loves to see this, because this can mean a reset in terms of the thesis. The big players are Monster and Red Bull. Red Bull's growing around 5%, Monster's flat to down slightly. So this, this is a big deal, because now you're talking about, a number 3 contender that's much bigger in scale, closer to, 16% of the category. And this is a category that's growing, expected to grow at roughly 10%, per year, somewhere between 5 to 10% per year. So, you can either have Alani Nu continue to take market share, maybe Celsius see some improvement as well. So these are sort of the key data points to be thinking about, as you're looking at it. Yes, I already mentioned there's around 50 million in synergies that are expected. all in, around 400 million in EBITDA just for 2024, not even forward looking, assuming some sort of growth. So around 400 million in EBITDA and 2 billion in pro forma sales. That's around a 20% EBITDA margin. That's pretty good. But truthfully, management has called out that they expect their margins to be much higher in the future. So better profitability, better free cash flow. They've talked about having margins comparable to Monster. So that would put them in the 30-35% range. But let's assume 25-35% long term. So either way, upside in terms of growth, upside in terms of profitability. This is what Wall Street loves to see. So let me do a quick sort of back of the envelope where, this new Celsius looks at the end of next year potentially. So I'm assuming growth, maybe starts picking up a little bit. So, Celsius, and we're going to talk more about Celsius's results in just a second, but, maybe it goes from 2 billion to 2.3 billion in revenue for 2025. That would assume around 15% growth, around a 25% EBITDA margin. So that is an uptick relative to where they are today, closer to 20%. And so that gets to around 575 million in EBITDA, factor in interest expense, factor in some taxes. Ballpark guess for free cash flow around $400 million. So then the question is, what's $400 million worth? The share count now is going to be a little bit higher because some of the Alani Nu founders and owners are going to get some stock in Celsius. So now with the share price currently around $33.50, that's around $8.5 billion market cap for this new Celsius versus that $400 million, rough guesstimate of free cash flow. Keep in mind, this is hypothetical. Things can go, way off. It depends on the execution. Stock price can go way higher or way lower. But ballpark, I think investors are looking at this saying, oh, this is now only 20 times free cash flow. That's not expensive if the Alani Nu acquisition can help reinvigorate Celsius's growth and potentially even earn them a higher valuation multiple. It wouldn't be, out of the question that if investors sort of reset and say, wait a second, this is now a premier asset that's rapidly taking market share. This is no longer, Celsius's stagnation. This is now the new Celsius that's growing 10-15% a year. Maybe you get that sort of revaluation and it goes from 20 times free cash flow to 25, 30, and maybe you keep working on that EBITDA margin improvement. So you could see a story where there's a lot more upside. And I think just thinking about that valuation, if you believe that, their free cash flow can go from 400 million to, let's say, 800 million over, let's say, the next 5 years, that could be a very compelling story for Celsius shareholders. Because once again, looking at this table, you're saying it's around an $8.6 billion market cap now. So if you truly believe in the growth story and believe that they can execute on this deal, get to 400 million in free cash flow and possibly closer to 800 million, later this decade, let's say 5 years from now, then you're saying, okay, there could be, significant upside potential. Okay, so what are my thoughts as I think about this deal, think about Celsius? First, a quick plug. As always, this is not financial advice. Also, I think it was actually just last week, Dominic, a premium member, wrote, I've been investing for about 6 years. This is a direct quote. And early on, I was just getting lucky. I had absolutely no idea what I was doing. Since joining your community in 2022, it has become by far the most valuable source of education for me. It helped me structure my research process, understand how to analyze companies, and most importantly, focus on what truly matters, developing a deep understanding of your investment checklist. No course, no book, nothing has been as valuable as having access to this level of research on currently relevant companies. Because of you, I've advanced far beyond what I've ever imagined back when I finished school. You've genuinely changed my life. I love to hear it, Dominic. I'm grateful to be on this journey with you. And if you too are looking for compelling ideas, come check out Unrivaled Investing. I also share my investment journey in real time when I'm, buying or selling things. Now, a little context. I previously called out Celsius a few times. It was a tiny position for me, around 1% of my portfolio. And the ballpark, the majority of my thesis was not the typical checklist, and I'll walk through my checklist in just a second, but it was more that it was a special situation, which is that it was growing quickly, but there was this large interest in, with Pepsi being a key owner, and maybe they would consider buying Celsius, sort of creating a floor for the stock. And just earlier this week, on Tuesday, around 11 o'clock, I sent this email to my subscribers calling out how I had just bought more Celsius. I effectively doubled down on Celsius, around $22 per share, bringing it to this more than increase by more than doubled my existing position. Keep in mind, still small, around 2.5% of my portfolio. And the main reason why I did not know about Alani Nu, I didn't think, I sort of had very mixed feelings about their trajectory in terms of their results. But the main reason why was the strategic investment Pepsi made in 2022, effectively valuing Celsius at $25 per share. That's where, they had effectively said, yes, we will convert our preferred into, Celsius stock at 25, and seeing it below 25 made me think, okay, I think this does potentially create a floor for the company, long term in terms of thinking about the valuation. So, and this is literally what is sent out. You can still see it. I said, heads I win, tails I don't lose much. This was for my subscribers at Unrivaled Investing, where my view was that maybe if they just maintain market share, they don't lose market share, and they're able to get the margin improvement that they had talked about, that you could get maybe 7% compounding from here, because, the market's growing maybe 5 to 10% annually. So keep market share, market grows 5%. Or there's the upside that something good happens and they, reinvigorate growth. Maybe Pepsi gets reinterested, and then you get 100 to 200% potential over 5 years. That was sort of my framework. So that's the reason why I doubled down, because I thought it was sort of a speculative bet. It didn't precisely fit my investment criteria, my investment checklist, but there was a special situation that Pepsi had done this investment. They were a key partner to Celsius. And I was just thinking, I like the types of setups where I can say, maybe like in a bad case scenario, I'm sort of flat over the next 5 years. And the upside is, maybe I make a couple of percent. And it was a lower conviction bet because I didn't have, a strong degree of certainty saying, oh yeah, for sure, it's going to be much, much bigger in the future, or have, say this is a super high probability. It was sort of, it was a speculative increasing of this position. And, let's be frank about Celsius's core results. Their core results have stunk this year. I mean, year to date, or in 2024, their revenue only grew 3%, while volumes grew closer to 20%. So that does suggest, their distributors are getting more, the retailers are getting more, but they're not seeing it. And previously they were talking about, well, it was the Pepsi inventory rebalancing, but then in fourth quarter, they were talking a lot less about the inventory rebalancing and still posted a negative 4% drop, in revenue. And that is just, that is incoherent with the growth thesis that I initially, considered when I said, oh, okay, this is a growing asset. Maybe it keeps growing at 10, 15% per year. And there's this Pepsi option that, sort of Pepsi lottery ticket. And so seeing that the growth picture not, really fall apart in 2024, that's been a increasingly red flag for me. And then you see their EBITDA, also decline. Now they did hold it together, and they had a sizable lawsuit that they settled. But overall, just not impressive results. So I don't think it's these results that's driving the stock higher. It's folks going, wow, Alani Nu, that might be the new sexy thing. Celsius was previously the sexy thing. Now it's Alani Nu. And I'm thinking about my checklist. The first item is aligned management. I really do prefer seeing founder-led or CEO with tons of stock. And I'd say Celsius doesn't really jump out to me and from the aligned management, though the CEO has done a good job growing the business. I got to give him a lot of credit there. Compelling valuation. 20 times free cash flow, it just really depends on, do you believe in the execution? Do you believe they'll get those synergies out of Alani Nu and that $50 million that they're talking about? Will they successfully execute on this transaction, sort of merging these two different companies with different user bases? The obvious growth potential, that's the one where it clearly fails the investment checklist for me personally, which is that previously I thought, maybe this category has more growth, but it's just not obvious to me. And maybe I'm being too impatient here. And you can definitely call that out in the commentary below. Maybe this is just an off year for them with inventory rebalancing, and then maybe it re-picks up in the future. But it doesn't strike me as obvious. And I prefer, making the much bigger bets. And I have, bigger bets on things where it's like, oh, this is why it strikes me as very high probability that this is going to be much bigger in the future. The enterprise, the free cash flow, the sales will be much bigger. The book value per share will be much bigger in the future, where something like Celsius, if anything, seeing the growth sort of completely deflate out of Celsius this year, it does make me wonder if, you could see a development like that with Alani Nu in a year or two from now. Maybe some other, wackadoo brand comes up where people go, oh yeah, this is what I got to own to get my jollies. And so I personally, I'm not crazy about, drinking it myself, because my chest will pop out of my heart will pop out of my chest. I don't think you guys would like that if I were doing a Zoom. Like that wouldn't be any good. So I stick to my tea and coffee. Yeah, so this is why it was a speculative position, but I'm now completely out of the position. And just this morning, once again, exclusively to my Unrivaled Investing subscribers, I called out that I had fully exited the position around $33. This was a slight gain. My prior purchases were, at a loss, whereas my more than doubling the position, or roughly doubling the position, earlier this week brought it into a net gain. So I would say a slight gain. Obviously the purchase earlier this week's up, closer to 50%, but when you combine the two, my cost basis was in the low 30s. So I view this as a slight gain, but far from a home run. This is not what I'm typically looking for on my investment journey, which is, I either have these compounders that I want to hold that sort of fit this checklist, and I go year after year, I'm just gonna be happy holding them. If they sell off, that's okay, because you got founder led and lots of free cash flow, and maybe they buy back their shares. But I also do special situations, and sometimes it's special situations, I think, from my own personal track record, are much more hit or miss. And, sometimes they hit. Like years ago, from my earliest subscribers at Unrivaled know that I actually bought warrants in HIM stock the year that they were a SPAC, and those warrants went up something like 5 to 7x in a year. And so, sometimes special situations can work out, but that's the nature of special situations, is that you're going to be pulling a lot of duds, a lot of things. It's not most of my portfolio I want to dedicate to low turnover things that I can just sit and hold and say, I love being partnered with its management. I love the trajectory. I love, the obvious growth that they're calling out. Several of my companies that I'm invested in, the CEO owns 40% of the company. So it's like huge skin in the game aspect where, if they fail to execute, they're probably going to have trouble sleeping at night. So I love that alignment. Whereas here, there's been a history of large insider sales, and it's not the obvious growth that I expect. So that's why at this point, I've done a few videos on it. It wouldn't surprise me if Celsius, if they have just amazing execution, if Celsius over the next, let's say 5 years, doubles from here. If they get that reinvigoration in terms of growth, and they're growing 10, 15% a year, and their margins are also expanding, would not surprise me at all if Wall Street said this is worth more, and then maybe even get that Pepsi acquisition. But now, Pepsi owns roughly the same stake, ballpark, as this new Alani Nu family. So I'm not even sure, the Alani Nu investors and founders. So it's not even clear to me if this dramatically increases the odds that Celsius could be acquired by Pepsi, maybe. But at this point, it's just too hard for me. I'd rather, focus my attention on positions where I'd say, 2.5%, it's sort of rounding error. I would rather, and look, I'm still going to do these occasional special situations. There's one that I'm looking to buy that, I think, clearly has, 5 to 10x type of potential. And I recently, bought a little bit more. So I think there's room for both, but look, it depends on everyone's individual investment journey. I like having a little bit of both, but, some people say, Daniel, don't waste my time with these special situations. I just want these sort of long-term compounders. And so I hope this video, talking about Celsius, this game-changing acquisition, has been helpful for you. If you have any thoughts, would love to read it in the comments below. Thanks so much for tuning in.